Ignore the noise? I have tinnitus. Can't ignore the noise. All right, now get this. All right, let's go over this. This was the best call I've heard in a long time. I'm going to tell you why.
Okay.
First, everyone wants to cut off Tony Sacconaghi. He is Mr. Negative. Most of the CEOs that I talk to say, that guy, that guy, that guy. All he does is talk negatively. So he went negative. Elon Musk had it. I like that. Secondly, how about this, Jim? We have no interest in satisfying the desires of day traders. I couldn't care less. Please sell our stock. Don't buy it. How good is that? That is the truth. And then finally, he says about the individual investors, he says it to Galileo, not to Copernicus, not to Einstein, but a guy actually named Galileo on the call. He goes, I think if people are concerned about volatility, they should definitely not buy our stock. I'm not here to convince you to buy our stock. Do not buy it if volatility is scary. Amen. Isn't that exactly what we want? I mean, if I were Elon Musk, I would have done the exact same thing. I would have done the exact same thing.
I can't figure out whether you're being sarcastic or not, and that's a first for me.
No, I'm not being sarcastic. These are all the things that should be said. If you own this, if you're a hedge fund, get the hell out of my stock. If you don't like volatility, get the hell out of my stock. Thank you. You know what this is called? Truth from Musk. Truth.
What if you're a long-term holder who just wants information about the three?
Yeah.
Yeah, you know, I don't think that's as important as what's under the hood. I think the car guys, you know.
I still.
No, I am not kidding. Tony Sacconaghi, I've had enough of him too. I am with Elon. Let's go to YouTube, okay? Let's go to YouTube. And the guy who was on YouTube, hey man, he loved the car.
He loved
What's
the
the matter
car.
with that?
By the way, it was RBC analyst Joseph Spack who asked about the Model 3 reservation.
Yeah, what was that all
And that's
about?
a key area here because people are trying to understand exactly how many have been, deposits have converted to actual commission cars, and he wouldn't answer that.
I thought it was so much better than what he could have done, which would have said if I were Musk, if I would be a simulation of Musk. Remember he told me that I was a simulation,
yes,
so there's a push me pull you. I would have said we have even more reservations than ever. So he didn't do that. He just cut the guy off. None of this is, I'm kidding. None of this. And then what he has to do. You know what's going on this weekend? You know what's going on this weekend, right?
No.
Kentucky Derby.
Besides Cinco de Mayo at Bar St. Miguel and Kentucky Derby, it's Buffett's weekend.
Yes.
This is Musk's plea for help. He has to have a Tesla weekend. He has to close the Gigafactory, not just because he has to retool. He has to close the Gigafactory and just have the flock out there, okay? Because he doesn't want the flock on the call.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.
This highly unusual and controversial earnings call for Tesla is the talk of Wall Street. So you can see the stock sinking the minute CEO Elon Musk started insulting analysts and even insulting his own guests. So what we did was we pulled out some of the most controversial moments during the call. Listen and judge for yourself.
Every data point, Rod, that we look at internally suggests that we are best in class, but we don't.
Best is not a class.
Yes, we're the best. Sorry.
Best in a class of one.
And so where specifically will you be in terms of capital requirement?
Next. Boring bonehead questions are not cool. Next. I mean, I think that if people are concerned about volatility, they should definitely not buy our stock. I am not here to convince you to buy our stock. Do not buy it if volatility is scary.
What percentage have actually taken the step to configure?
We're going to go to YouTube. Sorry. These questions are so dry. They're killing me.
Thank you. Our next question is from Galileo Russell with Hyperchange.
Here with us right now, Galileo Russell. He goes by Gally. He's a Tesla retail investor who crowdfunded his way onto the Tesla call, usually reserved exclusively for analysts and institutional investors. All right, you're the host of your own YouTube channel, correct? It's called Hyperchange TV. First, how did this come about that you then not only got to ask one question, you were on for 20 minutes asking questions of Elon?
Yeah, so the reviews of the Tesla conference calls are usually one of the most popular videos on my channel, and my subscribers actually suggested that I try and get on the call and wanted to vouch for me. So I started a campaign to do that, and over 200 shareholders emailed Tesla trying to get me on the conference call as sort of a voice for the retail investor. And, I tweeted it at Elon, and surprisingly, he went for it and wanted to have me on the call, so we made it happen.
You probably thought you were going to get one question, right?
I did think I was going to get one question, but I assumed I would be going towards the end of the call, so I prepared significantly, 10 to 12 questions, and, I got a ton of information from the Hyperchange community and my fellow Tesla bloggers, and so, I was ready to go, and then when Elon kind of gave me the floor to ask more than one question, I kind of ran with it.
Well, you were on the call with the big boys, the so-called heavy hitters, the Barclays, Deutsche analysts. I believe Piper Jaffray was on there, Sanford C. Bernstein, Goldman Sachs, Morgan Stanley. And suddenly he cedes the floor to you. And we've worked with Elon for years. I mean, I think I was the first journalist on television to interview him 100 years ago about SpaceX. But maybe he was feeling attacked and thought, oh, I'm going to get some softballs from you. I would like to say that you started asking him about that very floor that Elon and I are on right now, where they make all of the Teslas in Fremont. And you brought up the Model Y, which is supposedly the new upcoming car. You asked, will it be made in Fremont? That makes news, whatever his answer is, correct?
Yeah, there was a Reuters report that indicated production would be starting in late 2019 at the Fremont factory, which is in direct contradiction to what they had said in the previous earnings call. So I just wanted to clarify that with that one point.
And another analyst pushed him and he said, no, it's not. It's going to be wrong. It's going to be probably 2020, not 2019, right?
Yeah, exactly.
What do you think of Elon Musk now? He was rather harsh on some of the analysts. Do you feel that he gets a pass because he is such a disruptor? And, let's keep in mind, Gally, $750 million in losses this quarter.
Yeah, I mean, I think he has long-term retail investors in mind, and it's just been quarter after quarter that analysts ask these questions that are super granular. For instance, the analyst he cut off was asking something that had pretty much been referenced almost exactly in the shareholder letter that had been put out. So they're not adding value to the long-term story, and I think that's why there was a ton of pent-up enthusiasm to get someone on the call who didn't have those incentives to ask the questions, to get the next capital raise, fees as a banker.
How many shares do you own?
54.
54. At what lowest point did you buy?
Almost all those I bought at about $200 per share.
Okay, so you're up $84 per share. And finally, your YouTube channel. How many people do you have following you?
Just a little over 10,000 after all this news has hit.
Before the conference call, how many did you have?
About 8,000.
Okay, so suddenly you're are you going to continue with the backward baseball hat? I like it.
Definitely. I try and be authentic. And, I think that's something that's really missing from this whole situation is that, people see these analysts in suits, super corporate, they're not representing the true shareholder. And that's why I started my channel, because I want to inspire millennials to take an interest in finance. And by making it fun, authentic, just showing who I am, I think that I can really do that.
Okay, Tesla, buy, sell, or hold?
I'm holding for the next 10 years, super long term.
Good to see you. Come back when you get on your next call. Are you picking a stock to try and muscle your way onto the next conference call?
I only own Tesla for now, so okay. I don't think so.
Yeah, okay, you need to broaden your portfolio. Make it a little more balanced. Gally Russell, good luck to you. Come back again.
Yeah, thanks for having me.
Okay, he's a disruptor himself. What moxie?
Total switching gears, listen to this. Literally. Tesla, burning through cash, lost $785 million in 3 months. Got that. Look at the stock. However, Elon Musk, whoa, did he give a bizarre earnings call? He was cutting off analysts, calling their questions boring. Look who's here. Our own car guy, Gary Gastilow, FoxNews.com auto editor. Look, you talk to people in the car industry all the time. At this point, is Elon Musk the leader that Tesla needs?
He's more interested in the product. He loved talking to this YouTube analyst last night, this Galileo Russell guy.
No, wait a second. He's not a normal analyst. This guy's a rank amateur from outside the analytical community. The analysts were cut off. He wouldn't answer questions about money. He wanted to talk to this youngster.
Right, who's a Tesla fanboy who owns 50 shares of stocks, who asked some interesting product questions. But look, it got him away from how much money you plan on spending this year, how many people are actually turning their reservations into orders. So these are the issues that need to be addressed for the people who own a lot of the stock. Wall Street, he was rude to them. They're being rude back today. You can see that in the stock price.
He shouldn't do this. Yeah. He should not. The man needs to borrow a lot of money. I'm hearing $2 billion fairly soon.
Yeah. Although he said he wasn't going to borrow any money this year.
He did say that. I mean, I don't think a man in that position should be saying things like that as he did. Will you join me in this?
One of the big issues that came up last night was just on the production end. The problem they're having is in the assembly of the cars. They could build the batteries, they could build the engines. It's so easy to build cars. This is a 100-year-old practice. The fact that Tesla can't get that core competency down is really the issue here. Now, look, one thing we did see yesterday is they're generating a lot of revenue by selling the cars that they're making, but they're not making enough to generate enough revenue.
You, sir, are walking away from the question. Is he the right guy to lead Tesla at this moment? I'm questioning his leadership. What say you?
No, he needs to clean up the business. They need to get their act together. They need to start building cars.
Well, is he the right guy to do it? Talking like that, is he the right guy to do it?
No, I think he needs to move away from that and focus more on the product development. That's what he loves talking about. That's what he's interested in, this future dream of autonomous cars that you don't own or you do own and you let other people borrow and you make money from that. And even this, look, last night, he didn't just go after Wall Street.
Should he be CEO?
He came after the media again last night, blamed us
but should he
for
be the
reporting
CEO?
on the negative side.
He's got a wonderful product and he can't produce it. I mean, come on, should he be the CEO in charge at this time?
No, he needs an operating officer that can clean that up, if nothing else. And the fact of the matter is, the CEO should not be sleeping on the floor of a factory. Other ones don't do this. That's a
maybe
bad
he was
sign
exhausted. Maybe that's why he did it.
I loved it, though, because he went very Trumpian, didn't he? No, boring, next.
Yes, he did.
It was right out of the Donald Trump playbook.
Elon Musk and Donald Trump. Oh, yeah, that's a mix. Okay, I think we can all agree, though, Tesla makes a fine car.
Yes.
Okay, got that one right. Gary, thank you very much indeed, sir. Pleased to see you.
Tesla's Elon Musk says if you can't stand the heat, then get out. And the company's analyst call yesterday, our next guest, encouraged Musk to give more updates about progress with the Model 3 sedans in order to help the company's stock.
I completely understand your frustrations, and I'm frustrated too on how myopic we are right now. They also say that great years are made out of quarters, and great decades are made out of years. So everyone's short-term focused in some ways, and volatility has a way of shaking people out, even that are strong and want to be there. And so, and anything you can do to help in the near term on that, I think is helpful for the stock. That's it.
I mean, I think that if people are concerned about volatility, they should definitely not buy our stock. I am not here to convince you to buy our stock. Do not buy it if volatility is scary. There you go.
Well, joining us on the phone now is Ben Callow, Robert W. Baird's senior research analyst. He holds an outperform rating and a price target of 411 on Tesla. Ben, it's so good to talk to you because the move in Tesla stock last night after hours really blew my mind. I mean, the stock was holding up after hours earnings, and then all of a sudden you wind up having him unwilling to answer questions. Stock moves lower, and then he continues to say, if you don't like vol, get out of the stock continues lower. What was your take?
Well, first of all, good morning. So I think, there's a couple things here. His approach obviously didn't go over well, as we saw in after-hours trading. I think, first of all, I think the metrics, when we actually look at them, the performance, whether it's with the Model 3 or gross margins or where their cash position is, that beat expectations. Now, the backdrop, this is the most shorted stock in the country. You have constant noise that he's having to answer, the company's having to answer. So I understand that frustration. They laid out all of the details, a very detailed quarterly report. And I think that after a while of getting these same type of questions, he got frustrated and said, let's move on. I don't have time for this. Now, is that the right approach? It's not making friends out there, but this is kind of who he is, and this is what you get with Tesla, and this is why Tesla is where it is at the same time. So you get the good and the bad.
So Ben, if his job was not to sell the stock, he did a great job at it because you could see what happened to the stock price as a result. At the same time, he is burning through cash. As you say, maybe not quite as much as we thought, but it's a lot, over $1 billion in the corner. He's likely going to need some more cash before the year is out, even in success with the Model 3. How is he going to get that cash? Does this really mean he's going to have to go to the debt markets rather than equity markets to raise it?
So he reiterated that he is not going to raise cash. Now, no one believes that out there because that's a sentiment out there. Now, if he was really trying to pander to the markets, he wouldn't have acted like that, which I think is something that the bears are missing here in saying, oh, he's a fraud or he's a huckster or whatever kind of term you want to use, which is getting louder and louder. But for a guy to say, hey, don't buy our stock, it's volatile, if you don't want to be there, that's kind of honesty that we don't hear from many CEOs out there.
But nonetheless, to David's point, I mean, if they're basically going to burn through the majority of their cash this year with a buffer of like $1 billion, at some point it's going to have to go to the market. Will it be as open as it was before?
Well, I think if they deliver on the metrics that he set out, ramping the Model 3 and hitting their gross margin targets and hitting profitability, I think the market will be open. And I think along the way, and that's what I was trying to get out, is if you give some updates, then the market opens up for you.
Elon Musk was blunt with nervous shareholders during a rather highly charged earnings call. The Tesla CEO cut off analysts. He got defensive about the electric car maker's finances.
Let me make a final case out of it. You're
capital
next.
requirement.
Next. Boring bonehead questions are not cool. Next. Sorry. These questions are so dry. They're killing me. I am not here to convince you to buy our stock. Do not buy it if volatility is scary. There you go.
All right, joining us for more on the phone is Tony Sacconaghi. He's the senior research analyst at Bernstein. He has a market perform rating and a 265 price target on Tesla. Was on that call and actually got a bit of an earful from Elon Musk. So, Tony, was this unlike any other call you've experienced in terms of a fractious CEO?
This was unusual, certainly. Often CEOs can be disappointed or disturbed by questions or don't appreciate multi-part questions. But I think the level of sort of outright dismissiveness was unusual.
Will this, in fact, affect and undermine investor confidence in Tesla's outlook then?
Look, I do think certainly the investor feedback that I've gotten today is there is incremental concern when on an analyst financial quarterly call, the CEO doesn't appear to want to talk about important financial metrics. And, the read-through is that potentially the CEO doesn't care or isn't focused about those financial metrics, or ultimately the numbers don't tell a good story. But either of those interpretations are not particularly comforting.
Yeah, I mean, one of the things that's so striking about this, Tony, it seems to me, is that this is a company and a management team that really needs support from investors and the street, not to antagonize, but to reassure. You think of all those years that Jeff Bezos persuaded you all to keep money in despite no profit. Do you think there's an end game here, or just a man who lost his temper?
Look, Elon is a brilliant visionary, and he has extraordinary strengths, but clearly at times he can become frustrated with the mundane, and he can be temperamental, and I think that's what we saw today. I think last night, excuse me, and so I think for investors who know Elon, they're probably not entirely surprised, but as I mentioned before, a reticence to discuss financial metrics in a forum that's created for financial metrics can be incrementally worrisome.
Okay, so let's discuss some of those metrics, revenues, margins, cash flow. How did they do compared to your expectations?
Well, the quarter itself was really in line. I think where the incremental disappointment was the company has been stating that it believed it could get its Model 3 margins, gross margins, to 25% once it got to a volume of 5,000 cars per week or shortly thereafter. So the implication was that might happen in the third or fourth quarter of this year. Last night on the call, they said no, they didn't think gross margins will get to 25% till mid-2019, and that they would likely only get to 20% by the end of the year. So the gross margin trajectory is weaker than the company thought 3 months ago. And that's important because gross margins obviously are an important driver of whether a company can make money. and making money has been elusive for Tesla. So that being pushed out 6 or 9 months was certainly an incremental negative in our eyes.
So cash flow, very important. They're reiterating that they can become cash flow positive for the third and fourth quarter. Is that possible?
It takes a pretty Herculean set of assumptions. By our calculations, they'd, really have to scale back on growth and research and development and selling and marketing SG&A expenses. So we think that, in order for Tesla to be profitable and be cash flow positive, those expenses might only grow 15%, whereas revenue might grow 70%. That's a pretty big disconnect. And so we do think that getting to cash flow positive, while not impossible, will be difficult to do. And in doing so, it may have unintended consequences in terms of starving spending in other areas.
Tony, there are those who are saying this is not a week for you. You got yelled at on one conference call and put a bearish note out on Apple just before it surprised the market. Why did you get Apple wrong to that extent? How did Apple manage to surprise that way?
Look, we did get Apple wrong going into the quarter, and there were a lot of supply chain data points that were very negative. And I think our interpretation, as well as some investors, I think investors were surprised as well, which is why the stock was up considerably yesterday. Our interpretation of those data points was that the iPhone cycle would be weaker than what Apple printed. And that turned out not to be the case. They appear to be enjoying a somewhat normal seasonal quarter, a seasonal cycle for iPhones, and that was clearly a surprise to us, and I think more broadly to the marketplace.
Does this change your long-term view on Apple at all?
No, we've had a view on Apple for a couple of years that the stock is not a core long-term holding. And what we mean by that is we worry that the iPhone is such a big part of Apple, and that over time the iPhone itself is a relatively mature business. We don't think it has much growth, and we think over time replacement cycles for iPhones will probably extend. And so, we really struggle to see whether there's going to be iPhone growth going forward. So if your principal business, which is 65% of profits, and then it helps drive part of services, which is another 20% of profits, if you don't have a clear path for growth, we find that hard to say this should be a core holding in your portfolio. Now, that said, the stock has made people a lot of money over the last couple of years by buying at the right time and selling at the right time. And so I do think it is more of a trading stock. And coming out of earnings, my guess is the next move in the stock is probably up. Does it mean I want to buy it and own it for the next 3 or 4 years? That's less clear in my mind.